Hello and welcome to episode 19 of 11FS Spotlight. In this weekly show, we shine a bit of a spotlight on the best and the brightest in the tech and financial services industry. We try and understand what gets them going, what gets them growing, and what they really think the future of the industry will look like. Today's show is brought to you by MyTech. Digital identity verification trusted the world over. Secure more high-value customers while reducing risk and costs with MyTech, a global leader and enterprise partner in identity verification technology. And just before we get going as well, I wanted to say that we're going to be hiring lots and lots and lots of people. Over here at 11FS, we're working super duper hard on the next generation of financial services, and we're looking for a bunch of new 11s to join us in that venture. If you or someone you know is looking for a new challenge, check out the roles that we've got over in consulting, across product, engineering, design, and pretty much everything else at this stage. You'll find them all over at 11fs.com/careers. So on today's Spotlight, I am absolutely delighted to be joined by Hiroki, Takeuchi, and Matt Robinson, who are the co-founders over at GoCardless. Now, if you guys don't know, GoCardless had just turned 10, which is an amazing period of endeavor. And we're going to be doing a little bit today to look back on both what GoCardless has done over that period, but also actually how the UK tech scene has really changed over that period as well. So Hiroki, Matt, how are you doing?
Good, thank you. Thanks for having us.
No worries at all. Lovely to have you both on. I mean, how are you both doing to start with? So we'll start digging into to GoCardless and everything that's happened over the last. I mean, we're going to try and squeeze in the next 40 minutes the last 10 years of both of your lives. I feel a little bit sort of, who was that guy with the big red book? Like the sort of this is your life vibe. It's going to be a bit weird. There might be some surprise guests we'll roll out just to, bring some. No, I'm joking. We won't do that really. But I mean, how's lockdown part, whatever it is now, doing for you guys?
I don't know about everyone else. I'm feeling quite tired and probably a bit numb. It's like I've lost track of time, lost track of what's going on. Don't really know what's going to happen next. So I'm looking forward to some good news, but I have no idea when we're going to get it.
Yeah, very true. How about you, Matt? How's lockdown life treating you?
Look, I think everyone's the same, but the reality is, I think we're pretty fortunate, right? With our setup, can work from home. Everyone's happy, healthy, got plenty of space. So I'm pretty appreciative, and I'm kind of settled in for the long haul. In that, I think this has got a little bit further to play. Hiroki would just say it's because I'm a hermit.
I was about to say. I was literally about to say that. I was like, yeah, it's easy for you to say that. You like nothing more than to coop up on your own and not see anyone. So
yeah,
this is perfect, ideal territory for that.
I was going to say, I'm introverted by nature. So for me, I'm like, this is great. Like, you have to actively pursue meeting people and seeing people in this period of time. So it's, I think it plays to that hermit lifestyle, doesn't it? So, I'm with you, Matt. I think the vibe is probably, there's going to be a lot longer than everybody expects this one to take, sadly. But let's see where we get to on this anyway. For everybody who's watching this, a big part of this, as always, is really your involvement. So if you've got any questions for wherever you're watching this, whether it's LinkedIn or YouTube or wherever you're picking that up, weird intonation with YouTube then. Said that like my mum would say it. That was weird. But if you've got any questions, got any comments for the guys as we're going through, drop them in and we'll weave them into the conversation as we go. Hiroki, I mean, starting with you really, for anybody who doesn't know GoCardless after these 10 years, like firstly, if you've been living in this industry, you're living under a rock, right? But can you give us the pitch? What's the background to GoCardless? And we'll get into why did you start the company in the first place in a second.
Sure. So we're a payments company focused on providing the best way to collect recurring payments. And so we work with a really wide range of businesses, over 60,000 businesses collecting over $20 billion a year through the platform at this point. And the thing that they all have in common is that they have recurring business models. So everything from subscriptions, invoicing, installments. We have a really wide range of businesses, all the way from really small organizations through to some of the biggest and best known brands in the world. And we help them by building technology on top of the bank account rails that exist all around the world, which for a variety of reasons are the best way to collect these kind of recurring payments. And we help them to do that.
Very good. And building on those banking rails, as you say, that are completely different in all of those geos is no sort of mean feat in itself. We'll probably come back to that in a second. But I mean, tell us a little bit between the two of you, like, why did you start the company in the first place? Like, what was the driving force from your perspective in terms of why did you do it in the first place, and actually how did you guys get together in the first place? Making it sound like a dating show again. Like, I've gone from This Is Your Life to blind date very quickly on this one. Apologies.
Well, Matt might have a different perspective, but I think that probably the driving force was like a lack of knowing what we were doing. So we were definitely on a journey of discovery. But maybe like the best place to start is where Matt and I met, right? Which is kind of, in some ways, for me, the genesis of the whole thing, really. And we both started our jobs in consulting at the same company. And so I met Matt on the first kind of week of our kind of orientation thing. It was like they took us away somewhere for a week or something to indoctrinate us. And the first dinner, I was sat next to Matt. And I mean, I think it says something that, the conversation quickly turned into, starting businesses. And our first ever conversation was really an argument, which is, I think, is a real kind of a good sort of indication of what our relationship has always been like. We're like an old married couple. But the argument we had was like whether you would start a business on your own or whether you would start your business with a co-founder. And I ended up winning that argument because Matt, in his hermit fashion, was like, I'm a lone wolf. I'd never start a business with anyone. I'd just do it on my own. I'd back myself. And I was like, I'd been indoctrinated. It's
the only one Hiroki ever won, by the way.
Is it?
That's true. That's true. But the one that mattered. I'd obviously been indoctrinated a bit more with the kind of the Silicon Valley kind of mantras and way of thinking, where co-founders were a real kind of big necessary factor in starting a business in many people's minds. And so I was always more of the view that, like, yes, you definitely would want to start something with a co-founder. And that's really where the whole relationship started. And we spent the first couple of years of our career at that consulting company, spending a lot of that time and energy thinking about all various different kinds of businesses that we could start. And then we ended up quitting our jobs to start the business.
Wow, exciting! I mean, you've got to be careful who you sit next to dinner with, right? It could have been all so different, right? If you'd have not sat down at that table, this all might not have happened, right?
But perhaps. Matt, what's your thoughts on it? What's your perspective?
I won't repeat anything. I think the big thing for us actually that shines through is that we were in love with the idea of starting a company even before we were in love with the idea of starting this company. And I think that's true for so many entrepreneurs out there, right? You want to do something, you want to make a difference. So that really shone through. And I think you talked in the original question, David, a bit about the idea. I think there's a stat that kind of more unicorns and big companies are built by outsiders. And I think that was kind of true in our case, largely because we were kind of dumb enough to take it on. Everyone in the space was telling us, like, don't do it, don't go and start a payments company, like, fraud is too hard, you're never going to figure it out. And the reality was, I think part of the reason we started it was because it was the only idea that we didn't know enough about to tear apart. So we ended up embarking on the journey. That's interesting. I mean, as you say, there's two schools of thought, right? There's the find a founder and figure it out. Find a founder, then find the problem, or find a problem and then build the business. And I mean, it's interesting. It's nice that you guys knew you wanted to do something. It was figuring out what that thing was. So I mean, so how did you go from, okay, like, you seem cool, I seem cool, let's build a business, to payments is the opportunity? You want to go first? I was going to say, we came up with a ton of ideas, and you can take a raft of the companies, like the biggest success stories in Europe, and like we came up with those ideas. You can take a raft of the worst companies to come out of Europe in the past couple of decades, and we came up with those ideas too. And do you know, I'd be really interested to see that second list. I feel like that's going to be 40 minutes of entertainment, if nothing else is. But maybe we'll save that for another show.
I think it's funnier to see the list, like, great companies that we thought were terrible ideas, because like Hiroki wouldn't let me stop Deliveroo. Oh right, yeah, of course, yeah. No, there was so many like ideas where we were like, oh, it'd be great if this existed, and then we'd look at it, analyze it, rip it to shreds, and think of the 15 different reasons why it wouldn't work, and then lo and behold, they've become fantastic success stories as ideas. So, I mean, I think it definitely like goes to the point that like the idea is so little of the whole kind of value that you create in starting a business, right? Maybe it's the starting point, but it's by no means where the value is created.
Yeah. And we didn't know it at the time, but you talked there about different modes of like find the founder first, find the problem first, whatever. There are some underlying kind of rules of physics that need to apply. So I think founder market fit is really important. You're going to take an approach when you build a company, and that needs to align with the company you're building. And I think we were quite fortunate. Hiroki, as he said, had been exposed to YC and various other things. We were very clear we wanted to build a technology company. We were very clear we wanted to take a product-oriented approach. And all of those things are the right way to go about building something like GoCardless. So whilst we didn't know the industry, we didn't have any of that side at all, frankly, what we did have was, I think, the right approach, that we're going to go into a space that's largely untouched by technology, where the average experience is pretty poor, and we're going to build a fantastic product with an ethos of transparency and kind of building great features for your customers and looking after them and being like really honest and straight about your pricing. And that was brilliant founder market fit, and that kind of helped lead us to getting product market fit, I would say.
Yeah, I agree.
How much, I mean, Hiroki, having met a bunch of your team and having spent, a little bit of time with you, there's a very a good feel from a cultural perspective from GoCardless. I mean, there's a question actually, Terry Russell sort of put in, how important has culture been in the success of GoCardless in terms of the sort of sustained growth and creation of the company in the first place?
I mean, I think it's fundamental.
We need to say hello to Terry. We know Terry.
Dear, okay.
Hang on, which Terry is this? Is this Terry, Coach Terry?
Yeah.
Hello, hey Terry.
It's a leading question because he could answer the question better than we can. But anyway,
this is like him just trying to angle for a plug. No, I mean, look, the culture's been fundamental, right? And actually, in terms of that point about like how we started the company and why we started the company. And Matt's point about, we were definitely more excited about the idea of starting a company rather than solving a specific problem. A big part of that was that we wanted to create something that we'd be super proud of, right? And the biggest part of that was who we were working with, right? We wanted to create an environment and a team that we were super excited to be working with every day. And so the culture was always really going to be important to that. I think what was interesting for us, and definitely I would do it differently if I was to do it again. And I know that Matt did it differently. I know Tom did it differently when he started Monzo. Is that we in the early days we weren't super explicit about the way that we built the culture. So we kind of got it right by accident. Not like complete accident, but we implicitly cared about the things that were important to culture. And we guarded them, and we were really on top of them, but we didn't do it in a really explicit way. And it was only much later in the journey when we started, being explicit about what are our values, how do we think about the culture evolving, et cetera, et cetera. But I do think that that care of the culture and the people that we were hiring, and it being as much about how you get there as where you get to, is been a big part of what we've been trying to do in the whole journey.
Yeah, I mean, and this is, I agree with that so much. It's amazing. And again, on a 10-year window, the only way you're going to sustain that level of success over that period is by having a sustainable culture that actually makes those things happen. So it's interesting. I mean, it's interesting what you say there about the things that are sort of, when it was you guys kind of around a table and you were, getting going, the things that are implicit in your heads. But when there's suddenly 50 other people in the room or 100 people in the room, or that, then actually that dynamic shifts, doesn't it? As you sort of grow those things, and the things that you never had to write down before, suddenly you've got to kind of write it down, because the sort of the whispers of the Chinese whispers of what those things mean and why, or the origin stories or the drive, like all of those things become more and more important. But I mean,
yeah, absolutely. And I just don't think we had an appreciation of what that would mean, right? Like when we started the business, I mean, I'd never even managed anyone, right? Let alone like built a team. And I think, Matt, you were probably the same. Actually, no, you had a bit of management experience from pre-university days with your first business, but so we didn't really know what it meant to have like a 50-person organization, let alone a 500-person organization. So I don't think we could have foreseen how you would kind of evolve a culture, but we definitely cared about it a lot in the early days, and we were able to curate it and really foster it and put in place the strong foundations through the implicit actions that we took. But I don't know, I'd be interested, Matt, like when you started Nested, I know you thought a lot more explicitly about the culture from day one, right? And like the values and things like that. And so, how did it differ from, when we started GoCardless?
Yeah, I did it completely differently, but I don't think we necessarily could have done that at GoCardless. So at Nested, the first thing I did was, first take a step back, what is culture, right? Culture is the output of a series of different things, right? One of those is the values that you define. The second is the way that you behave in the organization. And then the third is like the people the people you hire and the way you kind of train and reward them. And therefore, actually at GoCardless, we probably got 2 of those bits right, but we just didn't get the first one of writing everything down from day one correct. Mm-hmm. The reality is that if we'd have tried, we wouldn't, because we didn't know. We knew kind of what company we wanted to build, but we'd never managed people before. If we'd have written down values on day one, I'd be quite worried about what they would have been, to be honest.
Yeah, that's a good point.
And we kind of did, because I remember saying in the first year, hey, this fluffy stuff like values, right? We're more worried about being alive in a year's time.
Yeah.
In a way, that is a value, and in a way, that was probably the right value for the first year of the business.
Yeah.
Right.
Yeah.
We were very hungry. We were very tenacious. We were desperate to get where we're going, and that set such strong guardrails that, as Hiroki said earlier, we're probably of the culture and values we ended up with, probably 60 to 70% was like what we'd intended, and then there was 30% that we hadn't necessarily that required a reset. That's not bad. It's a bit like what the role of conventions in a constitution, etc. And then so next year we did it differently. I think I knew that those are the big things that contribute to it. We laid down the values really explicitly. We used those to figure out who we were going to hire, and how we were going to treat, train, coach, and reward them. And we also kind of let that be the shining light of our behavior. And that meant that, we probably got 80%. So the difference is not crazy, but but the implication was that it becomes clear when it's gone wrong, and it also, because it's more explicit, comes clear when maybe you need a change, because your values will be different pre-product market fit versus post-product market fit versus scale-up mode. Yeah. So that's my thinking.
Yeah, no, I agree with that. I mean, I always say culture's what you hire, fire, train, and reward on, as you say. And it's if you for the first 50. You don't know. You just don't know, and your focus very much is about, like as you say, execution at that period of time, isn't it? I mean, I think it's fair to say, unless you guys correct me, and you were like, "Nah, we knew this was going to be massive." Like when we started it, I mean, did you expect GoCardless to be processing $18 billion of a year? Like at the beginning of this, was this your wildest expectations of what it was, or was this like, no, this is a really big problem? Like the addressable market is massive. The opportunity is really significant. Did you think this would be so successful?
It's a weird one to answer in a way, because I'd say yes and no, right? Like yes, in the sense that we thought that there was a huge problem, and actually probably if you look at like the initial ideas that we had as we were starting the company, we were probably like thinking even bigger than we ever did any other point in the journey, right? But so we were aware of the scale of what you could build, right? But then at the same time, I remember when we first started, we were thinking like, oh, like imagine if you were processing like millions of dollars, right? It's so far removed. Like the idea of like $1 billion, like that's just such a big number that it was hard to comprehend. And so, I kind of look at it both ways. I find it difficult to answer that question. It's like, in some ways, yes, we always set out to build something really big. But in other ways, I sometimes do have to pinch myself and think, okay, wow, like we've come a long way here.
Yeah. Like, what do you think, Matt?
I think we first need to preface it like, yeah, it's 10 years and we're reflecting back on that, but like we've not done anything yet, right? We've got a lot of company building ahead of us.
Yeah, for
We're
sure.
still at the early stages of open banking, which I think is going to be a huge opportunity and a whole new chapter in this business over the coming decade. So that's the first thing I would say.
That's actually a good point, actually, because I think the one thing that has always been true is that it's rare that we ever like really think of it in the sense of like, you know, how far have we come, and you generally like are more always thinking like, where do you want to go next, right? And it's like, so, and it's always progressive, right? So when we were doing at the start, we were like, we want to get to the first $1 million of transactions. Now it's like, you know, how much bigger can it be? You know, you're always increasing the ambition. So yeah, I agree with that a lot.
And you mentioned, you mentioned open banking there as well. So there's a really sort of pertinent question there. So Lauren Clark asks, what plans do you guys have around open banking? Because I mean, Hiroki, you touched on building on top of, you know, banking account rails, but obviously open banking gives a slightly different context to how the slices of the industry is essentially operating. So do you guys see that as you talk about progression, do you see that as the sort of progression of the industry?
Yeah, for sure, 100%. You know, I think that, you know, for us, we never really set out to build a platform on top of like the bank debit rails that we're built on today, right? We just use those rails because they're the best fit for the problems that we're trying to solve. And, you know, open banking has obviously been something that's been around for a while. People have been talking about it a lot, and it's, you know, getting more and more momentum and hype. And, you know, we've been following it from the day one, right? You know, I remember when they first announced the idea, and it's always felt like a question of when rather than if for us, right? You know, we were always thinking like, well, if open banking becomes viable as an actual set of rails, then we will always use it. And it's more, when are they ready to be actually used? And so for us, like what we're really excited about is combining those open banking rails with the platform that we've already built. And you know, what we're particularly excited about is that bank debit has been a fantastic set of rails to get us to where we are today. You know, we've gotten to where we are by solving some of the limitations that bank debit has that makes it a really great fit for the customers that we serve. But it's still, you know, at the end of the day, is old legacy infrastructure, right? It's been around for decades. And so there's some limitations that it's very difficult for us to solve just purely through technology, right? And so what's exciting about open banking is that it's very strong in some of those areas where these bank debit and direct debit rails are kind of limited. But also open banking is not, I think some people think that open banking is going to solve everything on its own. And, you know, our view is very different from that, right? That open banking has its own limitations as well. And so we think that where open banking is limited, these direct debit rails are really strong, and where direct debit is limited, open banking is very strong. So they're very complementary, and we're really excited about combining them. And we think that that's going to be, you know, a core part of the next decade of the company.
Matt, you mentioned Nested. Do you want to talk a little bit more about Nested? What do you guys do there? Because I mean, it's an interesting sort of context for this conversation as well.
Yeah, for sure. I think the same beginnings as GC in many ways, albeit a very different business. We're in the property industry, so it's an industry with a pretty poor average customer experience and largely untouched by technology. And we've basically done two things. The first is build a modern estate agent, which is vastly superior to traditional ones. You know, agents and agency haven't really changed in 50 years. And that piece is working well. We should cross 1% London market share in the next 12 months, purely by trying to take the best local agents and then give them great tools to do their job better and give customers better tools so they understand what's going on with their sale and get better outcomes. And then the second is what that allows you to do, which is once you've got that professional service happening underneath, you can offer, you know, sophisticated financial products that couldn't otherwise be out there. So first of those that we offered was our Advance, which is we let people buy their new house before we sold their old one, because we're able to value it accurately and predict how long it's going to take, and therefore provide them basically a consumer-friendly bridging loan. And we've got a couple of exciting ones we'll be announcing soon. So no doubt I'll be in touch with you near the time.
Fantastic. I mean, that's really the move for. I mean, embedded financial services where it's relevant is so significant. And actually, it's interesting you've started with solving the the service problem to then allow you to solve the financial services problem. It's an interesting sort of journey on that one.
To be honest, that wasn't the plan.
Don't say that. Claim you were like a strategic genius, like you know.
I mean, this links to your previous question, which I think is like, you asked about, you know, did we always know this, what we're going to do with GoCardless, etc. And the Hiroki's yes is yes, this is a scale of the ambition we had. Yeah. But the no was, we did not have a clear vision of exactly what the business would be at scale. Yeah. That's incredibly rare and actually a really annoying founder post-rationalization thing that I think just makes it harder for everybody else out there. Because they come up with these brilliant like conception stories that are just not true. So I think we always wanted to like not do that. And therefore with Nested, the reality is we wanted to offer these financial products, but in order to be able to do that, we needed control of the transaction, etc. So we built the service layer as a piece to allow us to do it kind of purely for that. And then along the way, two things happened. One of those was we realized how bad the incumbents were, and that actually our service that we built for our purposes was just way better than anything else out there. And getting really good adoption and amazing customer reviews. So it's like, okay, this is a no-brainer to scale. And then the second is the economic backdrop of COVID and a variety of other things have meant that in terms of lending and origination, you want to be kind of somewhat careful. And therefore having this rail of agency that you can grow much more safely has been really advantageous for the business and quite transformative over the past, 18 months. I mean, we were able to, we doubled the business from Q1 to Q4 last year. I mean, we're on track to treble it year on year from Q1 last year to this year, which is insane. I could not have done that purely on the financial services side, trading through COVID.
Yeah, no, absolutely. I mean, and that's amazing. Congratulations with the success of that. I mean, I look forward to when did you start it? A couple of years ago. So like 8 years. Let's get back together again and see if it's on the same trajectory as GoCardless is as well. I mean,
probably a better one.
Yeah. Well, I mean, you touched on that point. I mean, Hiroki, I didn't, when you said yes, I didn't take it as a yes with the idea. I took it as almost a and you guys will have seen this in consultancy. If you join a team on consultancy environment, everybody gets together, you back the team over backing necessarily what you're doing. And I think that's interesting. You're both sort of finding that is like at the beginning of this journey, you knew you were going to do something awesome because you knew this team wouldn't stop until it was awesome, essentially, which is a great driving force for starting a business, isn't it? Yeah,
I mean, I think obviously depends on what your goals are, especially if you're in the kind of technology and VC-backed technology startup world. Then I think you have to have that mentality, right? You have to have big dreams and a vision, not necessarily a vision of exactly what you're going to do, but a vision to make something really big. That's kind of part of what you're signing up for in taking VC money, right? And we were always quite conscious of that, and we always felt that it aligned with what we wanted to do.
Yeah.
I guess go on. Sorry.
Oh, I was going to say, I think that was the original investment thesis behind us. Basically, Matt, Tom, and Hiroki are three smart guys in a big space, and they're not going to give up. I think they're going to figure it out. The bit that I don't like about it is backing the team, and it's got to be an awesome team or a super smart team, is that I think it, and we certainly see this when you look at the VC-backed community as a whole, it leads to kind of anti-diversity, right? Yeah. Where we've got an awful lot of, McKinsey, Bain, BCG, Goldman alumni founding businesses and raising lots of money because there's a presumption that by default makes them awesome and smart and great. So I think what I'd love to see is a richer, deeper understanding of actually like what an awesome team is.
It's very true. People do. I mean, the VC view is, you back the jockeys, not the horses, right? It's not just the idea; it's the people who are there to do it. And I guess in that sense, like you say, you do see, people backing people like them, and most VCs are, middle-aged white guys. So it is a circle that needs to be broken if actually we need more diversity in the startup ecosystem. Really, I mean, it's something that I think. I mean, the UK has done a better job, I'd say, maybe the most. I know you guys have had experience, obviously, from Silicon Valley perspective, but also in the UK. I feel like the the UK ecosystem, particularly in the fintech space, is very unique. And you guys, I guess, have seen this from a few different angles over the last 10 years as it's developed. How far have we come on things like that, Matt? I mean, has the scene completely changed since 10 years ago you were starting the company, or are there sort of similar themes that have just been almost accentuated over that period?
I think it's completely changed. I'd say it's radically different. I remember when we started GoCardless, I think you used to get credit simply for acknowledging that there was a problem. So to stand up in front of the company and say, hey, we accept there's an imbalance between, male and female in engineering, hiring, or, there's a diversity problem, like any of those things. And Hiroki should talk about this, because I think he in particular, we've done a really good job of this at GoCardless. But a decade ago, even for accepting that there was a problem, you were kind of forward thinking and ahead of 90% of other people. There was that view that I think is still sadly rife in some places of, I can only hire what's put in front of me, et cetera, which I think is a really damaging view. But absolutely something that, was prevailing a decade ago. Whereas now I feel like that's actually changing, and it's not enough to even acknowledge there's a problem now. You have to be doing something to solve that. And I think that's changed, and I think it's changing kind of somewhat exponentially. Like, I was chatting to someone recently where they're a writer, and their wife had been telling them for ages they needed to read a particular book on feminism, and it was from like 2 years ago, and he read it 2 years later, just having not got on his reading list, and was like, it's already outdated. And I think that's how fast it feels like we're moving. Or certainly it feels like we're moving. Maybe that's because I'm thinking about it a lot and talking about it a lot, and I'm in like an echo chamber where I see it, but I really hope that that's a broader thing.
I mean, that's a big difference potentially between big companies and startups. Actually, I mean, the strategic advantage, I guess, always of a startup is speed and agility of dealing with problems of all different kinds. But I guess in banking, we're at the point where startups were 10 years ago, which is like admitting that there's a problem is this, it's a virtue sign. We're going off on a tangent that I didn't expect us to go on to, but we should stick on this because it's important, right?
I think I've got a kind of not a different, but like an additional perspective here, which is like one of the things that I think has driven the change a lot is just generally how much the overall ecosystem has grown, right? And is grown in such a way that is attracting such a variety of talent, right? So if you think about where things were 10 years ago, building a technology company was not considered like not a mainstream thing to do, right? It was like you were kind of a little bit unhinged or crazy to do it. And most people, when we started, most people just thought we'd quit our jobs and we were unemployed, right? So there wasn't a level of excitement or even acceptance around technology startups and companies, and that has changed significantly, right, over the last 10 years. Like now, I think the social bar to starting a company is a lot lower. People are more excited about it, and a much wider variety of people are interested in being involved, and so that's enabling us to attract talent from a far wider array of backgrounds, and that helps a lot when you think about diversity, right? So I think it's kind of part of it is because we care about it a lot and we try and improve. And like Matt said, it's not just about paying lip service to it; it's about actually making a change and difference. But part of it is also because the wider societal kind of view of this kind of line of work has changed so significantly.
How did that conversation go then at the beginning? I remember talking to Tom Blomfield before, and he said, when he told his family he was turning down a great consulting opportunity in a big consultancy firm to go and start a business, like you said. I think they were worried about him. They were worried that he might have. They thought
he'd kind of had an episode.
Yeah, an episode, and like say, he's hiding his unemployment status. But I mean, how did that go then? Who did you have that conversation with to say, do you know what, I'm going to leave this great job and go and do this thing? Did anybody try and talk you out of it?
For me personally, no. I think that I was quite fortunate that my friends either didn't care enough or backed me enough. I'm not sure, probably equal measure. That they were quite supportive, and as was my family. So it wasn't something that I personally struggled with. I don't know about you, Matt. Maybe you have more caring friends.
I think my family knew that trying to talk me out of it would be an extremely effective way of talking me into it. So they were in a bit of a catch-22. And then I think there's also this like extremely naive Calvinistic thing that everyone who thinks you're smart or hardworking or driven or passionate assumes it's going to be successful, which is absolutely not the case. I could point now to a handful of instances along the GoCardless journey like that tipped it one way, and if it had gone, if the coin had landed the other way up, we wouldn't.
Oh yeah, there's a huge amount of luck, yeah, for sure.
Indeed. I mean, luck is a major factor in these things, but hard work definitely sort of tips that in your favor, doesn't it, through that period? I mean, just to sort of on the the point around 10 years in the ecosystem. I mean, the industry as a whole has changed so dramatically. I mean, just the regulatory system and everything. You guys have kind of been in business through a crisis, and all different things that have kind of come and gone. So I mean, regulation has changed. We talked on open banking a little bit earlier on, but the regulatory climate, Hiroki, as you were touching on earlier on, for fintech to be a real thing. I mean, 10 years ago, I don't think you told anybody you were starting a fintech startup. It was startup. It's a technology business. So I mean, how has that been sort of almost through that 10-year period?
Well, it's hard to really say because obviously at every point of the journey we've been at a different scale, right? So the way that you interact with the regulator when you're the scale we are is very different from how we interacted with the regulator when we first started. And so I don't know what it's really like for a startup to start now, right? What I can say though is I actually think the regulators in the UK from a financial services perspective were pretty forward thinking actually, and a big part of what enabled us to get started was because they were open-minded. And I mean, the reality was that we were able to get our initial regulatory permissions from my bedroom with Tom, Matt, and I filling in the application forms ourselves with zero experience of what we were doing, right? I mean, that said something about how open-minded the regulators were, right? They were willing to let us handle money.
I mean, that's either a great regulatory system or a terrible one, depending on which way you look at it. I
think it's a great one. I think it's a great one because, like, obviously, the level of scrutiny increases a lot as you scale, but you have to have that kind of open-mindedness in order for startups to get going, right? If they'd have said, well, you need 5 million in capital and you need 15 years of banking experience each to get started, you need all these other things, but we would have never got started, right? And we really wanted to do the right thing. We wanted to build things properly. So it wasn't like we were sort of trying to take shortcuts or anything like that. It was just they were setting the right level of regulatory oversight to enable startups to get going. And I think that's been fundamental to the wave of fintech companies that we've seen in the UK.
Yeah. What do you think, Matt?
Yeah, no, I agree. I think there was a wave of regulation around allowing non-bank providers of payment services that we were able to piggyback on. And I agree with Hiroki. You can put it boldly with we were in our flat and blah, blah, blah. But the reality is the bar was not experience or capital or whatever, all those things that are kind of binary and likely inappropriate. It was a work bar. If you had done the work and you understood the regulation,
for sure, yeah,
then you were able to get over the bar. And there are those other bars elsewhere. You've got to get a banking partner, you've got to put down a bond, you've got to do all of those things. But by having a work bar, in fact, the two things: one, by having a regulatory kind of regime at all that enabled it was pretty forward thinking. You jump to the US and various other places, and we always assume they're far ahead. Actually, in terms of infrastructure and regulation, like the US is way behind. When we were starting, basically an online recurring payments platform in the UK and Europe, we went out to Y Combinator, in the US, San Francisco, the heart of technology, and we were paying our internet provider via check, right? So I think the regulator and the infrastructure in Europe was, quite ahead of its time and was a really good point for us to start. And additionally, we could passport around the whole of the Europe, which sadly we're walking backwards, but that's another digression that maybe we can put to one side.
It's an interesting one. I feel, I mean, for anybody who still does a lot of work in the US, sadly, those things haven't quite changed. We received a check in the post, I think, but last week for a piece of work that we did in the US. It is, you know, the system sometimes is different. They do, they love them. But it is an interesting problem. All the, as you say, you know, rails aren't just rails. It's like, it's the things you have to sit any of these things on top of, aren't they? And sometimes that's transformation from a cultural perspective, I guess, in anything else, isn't it? I mean, one thing that's definitely accelerating these things, do you see what I did there on the transition all the way through all of these things, is COVID. You know, actually the adoption of digital through this COVID period has been phenomenal. If anything, I think probably accelerating everybody towards the types of visions that you guys have got for where the industry is really sort of heading to. So, I mean, how has COVID affected both of your companies now?
I mean, for us, it's been interesting because we've sort of seen a little bit of everything, right? So we've seen the benefits of a lot of the accelerations of the trends that we were already, you know, riding. So, you know, the move to digital, but some of the secondary changes attached to that as well, right? More and more businesses moving their operations to the cloud. You know, so we've been benefiting from that, but then also at the same time, you know, we work with a lot of organizations that have been struggling, right? A lot of physical world organizations, gyms, membership organizations, where, you know, they've had to effectively shut shop for the last year. And that obviously has an impact as well. So we've kind of seen both positives and negatives. You know, we're very fortunate in that overall it's been a very strong period for us. So we've been able to grow a lot, and you know, we've sort of net been sort of beneficiaries of the situation, but it has definitely been a very interesting challenge, and one that we feel very lucky to have come out on top during.
Yeah, I have to think a bit about both. Obviously, being on the board at GoCardless and then running Nested, I think GoCardless, the interesting thing is we're really an index of the 60,000 merchants that use us. And the health of our company is the health of those 60,000 companies. So we're really fortunate that we get our diversification across those 60K companies. We're really fortunate that lots of them are forward-thinking, high-growth companies that are generally benefiting. And we're really fortunate that a lot of them tend to be more technology-oriented by dint of, you know, using us and trying to move their commerce online, etc. So that's lots of positive factors. But then I think there's also like our job is to kind of do our best by those merchants, right? We're an index of them, and everything we can do to help them, A, is the right thing, and B, is good for us. So I think that's kind of how I think about it. And then at Nested, honestly, this has not been what I expected. If you spoke to me last March, like, and anybody can confirm, like, I thought, for frankly, actually both businesses, this was going to be a lot more challenging than it has been. And Nested, I was thinking, like, how the hell are we going to get through this? Like, there's no way properties are going to be getting traded, etc. And the market's been on a tear for a handful of reasons that we've been able to benefit from. But again, I think the most important thing for us has been that we've tried to conduct ourselves and be constantly ahead of the game, doing through this to do the right thing by the people selling with us, the people buying with us, and the people using those financing products. You know, and two examples of that are, one, when I first implemented measures even before lockdown in COVID of like what we had to do what we termed a safe viewing, my team turned around and said, we're going to lose more business because of the measures you're putting in place than because of this like pandemic. And I think it was right in one thing, which I said, like, the stuff we're doing may be overkill today. By next week, it's going to be just enough. And by the following week, it's going to be nowhere near enough. And I think that being ahead of the game there really helped and set us up. And then the second thing is with those lending products, we could have gone out and tried to offer way more of those. But again, saying, you know what, there's real risk here, not just for us, but for the customer, where they might take a loan and then the property doesn't sell when they expect to, and they end up paying more money than they would expect. We're going to be really careful about who we give that to and when we give it to them, and make sure that we don't have anybody where we come out the other side of this where they've had a nasty surprise. And I think if you do those things and you consistently do those things and look after your customers, whether you're trading through, you know, boom times or troublesome times, you come out the other side in a good place.
Yeah, I mean, there's a big part in that, and I mean, a big part in what you've done with GoCardless in terms of, you know, businesses talk to one another, right? So actually doing right by businesses, they will recommend you. Reputation really goes with that. Same with Nested, and actually, you know, Tom took that mentality into Monzo as well, right? You build something great, look after your customers, they tell other people. It's sounds dumb when you say it out loud, doesn't it? But it's actually pretty
it
pretty
just
much
goes back to the
hard
whole
to do.
YC mantra, doesn't it? Like make something people want.
100%.
Very simple, but
so right, we should be clear. We're not perfect.
True,
That's
but
true.
I mean, it's interesting though. But on that point of sort of learning and moving forwards, it's like if you learn from the mistakes really quickly, then I always sort of say falling forwards. Like actually, if you're always moving forwards, you're always learning from what you're doing. Then it is all learning. It's not necessarily mistakes. I don't like the. I don't know about you guys. I'm not into the sort of embrace and encourage failure thing, because I think as a founder, I think actually the thing you never want is failure. You want to learn and keep progressing forward. But I think it gets, to your point, it gets sort of almost either the fiction of being an entrepreneur gets idolized into something that it's just not, or the idea of like the founders always being right and knowing everything about everything, I think is always almost the ideological sort of Elon Musk kind of view of the world. But it's interesting. So I mean, last 10 years, they've been pretty hectic in terms of what you've been doing. Where are you going next? What's on the horizon for Go Cardless?
Well, I think we touched on it before, right? I think a big part of it is around, how do we continue to build out the best way to collect payments, and we have a unique view of that, I think, and open banking is the big focus for us there at the moment. But I think we'll see more and more account-to-account methods that pop up all around the world, and we see our job as bringing those all together into a single platform. And so that's going to be keeping us pretty busy, and we see a huge amount of opportunity ahead of us to continue scaling that.
Yeah, the only other point I'd emphasize, Hiroki's open banking stuff is obviously pivotal, but I think also it's the same thing we've been doing for the past few years, which is building out that global account-to-account network.
For sure. That's my point about these rails are popping up all around the world, and the key challenge is how do you bring them all together right around the world. Yeah.
And we want to build the most complete network anywhere, so that people, wherever you want to connect, wherever you want to collect to or from, if you're a recurring payments business, then Go Cardless is the right place to go and do that one integration and get access to the full network.
For sure.
Fantastic. Well, congratulations on the last 10 years, guys. Say it sounds like it's gone by in a snap, but you've done an amazing amount over that period of time.
I think just getting started, as Matt said.
Well, indeed, yeah. I mean, the biggest lesson on this is, like, say I come back to be really careful who you sit down to next to at dinner, because like sometimes 10 years later, like look what's happened, basically. So, but Fred, we're going to have to call it an end. I know you guys have got places to go, and thank you very much for joining us. Thank you very much for everybody for tuning in and watching this. Where can people find out a little bit more about you and your companies?
For me, I'm on Twitter, so it's Hiroki Takeuchi, and also at GoCardless. You can find out more about us there.
Very good. And you, Matt?
Yeah, ditto at MattJackRob on Twitter. More followers than Hiroki, I think.
I'm not particularly active.
There's another lesson, guys.
You have so many followers, we won't get into that now.
Another lesson: always stay competitive. It sounds
cool.
like, which is good.
Oh, yeah, for sure.
All right, guys. That's all we have for you this week. But we have another live show for you as well. If you ever tune into it, it's over, called Newsroom. It goes out live every Tuesday, 3:30 GMT. Basically, we deep dive on whatever the biggest top story is this week. Have a great week, everybody. Have a great time. Speak to you next week. Goodbye.
Thanks. Bye.